I have three types of analysis that I typically follow. Most of us are familiar with the first two, fundamentals and technicals, but I have a third, market conditions. All right, we'll talk about what is incorporated in that market conditions, but in general, when I look at a trade setup, when I look at the possibility of getting into a trade, I'll of course consider the risk-reward potential. I will of course consider whether I have the immediate technical catalyst to get into a trade. But first, before I even consider the particulars of the trade, I need to be confident that I have those three analysis types covered that would support my trade setup. Not only will it first move in the direction I want it to, but will it have the necessary follow-through to hit my targets. All right, so we'll look over this and we'll discuss this checklist and the individual components, and then we'll apply it to the majors. All right. So fundamentals. It seems pretty straightforward, and it is for most part, but there are a couple nuances here that I would like to point out. From fundamentals, first and foremost, always find out what's most important to that currency pair. All right. Or, if you will, other asset classes, indexes, whatever it happens to be. If I'm looking at something like the dollar-yen, what is the most important thing for the dollar-yen? Right now, there are a couple major themes that can drive the dollar-yen, take the reins. Right now, though, we are seeing that relative monetary policy is the most important aspect of the yen's drive. All right. So when we look for the dollar-yen and its pressure, we typically look at or consider the balance sheet forecast and QE expectations for the Bank of Japan. All right, that has given the yen crosses a considerable drive higher. That's why we look at this general performance. It has been pretty consistent across all the yen crosses. However, this theme is not always the top catalyst. Sometimes when we do have a shift in risk trends, a meaningful drive towards risk aversion or risk appetite, that's when this theme becomes more important, the relationship to risk. So then relationships or drives that we see in carry trade or drives we see in equity indexes like the Nikkei 225 here become more important, right? So this changes with time. So from a fundamental perspective, we have to identify what is that important theme and is it market moving at that time, all right? So that covers those two. The other is actually a trading approach in and of itself, and that is impending event risk. We often look to the economic docket when we're looking for sparks or catalysts that could potentially be good for, let's say, a breakout opportunity. If you see a very tight range and you're expecting a breakout, you'd look on the docket to see if there is any event risk that can help catalyze it. Otherwise, you'd look at that event risk and you would want to avoid it if you're looking for a range trade. All right? It's different under different circumstances. The approach that you take uses this analysis differently, but you want to separate those two factors to fundamental analysis. Technical analysis. This too, relatively straightforward. I like to first set the prevailing trend. All right? Now, for most of us, that's not very difficult. You can pull a 100-day or 200-day moving average, or a 100 or 200 period moving average, whatever time frame you're on, and establish whether it's rising or falling, and that can be a good measure. But one thing that I do like to consider is, even if you're trading on the shorter time frame charts, turn up the scale, turn up the time frame, the frequency. All right, look at daily charts, look at a weekly chart, and see what the general trend is. All right? Because that trend is there for a purpose, and probability says that is more likely to continue than it is to reverse. It's much more difficult to turn existing and persistent trends. So establish the trend, whether it's higher time frame or whether it's just a general bearing for your chart. Then establish whether the markets are range or trend bound. Is there consistency or is there a lack of consistency? The third, and I think the more unusual aspect, most of us just look at markets in two levels of analysis, technical and fundamental analysis. But I think that market conditions draws some aspects of trading that are different, fundamentally different than the other two types of analysis. Volatility level is a very important one. All right, if you are looking at, let's say, Euro USD or Aussie USD, if you were looking at volatility level of the general backdrop of the market, not necessarily the individual currency pair, but that matters as well, but looking at the general activity level of the markets, would you say right now that we are talking about quiet markets or really active markets? We're tending towards the more quiet. All right? Knowing that, it's going to be more difficult to force breakouts. All right? When you have setups like this Kiwi Yen wedge, which seems like it's a foregone conclusion, it's going to have to break, but under these volatility conditions might not be good. It also is important to establishing whether the S&P 500 or any other major existing and prevailing trend like this can turn, because to generate the pressure necessary to get that first big leg down is a much higher degree of what you would need. Right? Momentum is the ability to see a breakout and then find follow-through. Momentum is telling us whether there is a continuation in prevailing trends like this or whether it just happens to be chopping along. It's easier to generate a new trend when it's coming or starting from a flat market. All right? So momentum individually is an important market condition. And then correlations. We were looking at the Nikkei 225 against the dollar yen and other yen crosses. We know that that relationship exists, and we could take advantage of that. Of course, it indicates a very important theme, but that helps us to establish relationships that we wouldn't see otherwise. All right. So, with that 3-measure checklist, let's look at some of these. Let's look at the 4 top majors. Euro USD. All right. Fundamentals. What is most important to the Euro USD right now? All right. If we're looking at the euro and what is driving it, the euro has been universally improving against its counterparts. That's something that we talked about yesterday in our strategy video. We looked actually at this particular chart. There has been a consistent advance for the euro against all of its counterparts, and one of the major aspects of this is foreign investment into the high-yielding periphery bond market. So when we look at Italian or Spanish yields, those yields are exceptionally high, or at least they were 18 months ago. So those look like great rates of return for a market that is clamoring for any kind of return that it can get. And it looks like there was little to no risk. All right, that's the assumption of moral hazard or whatever you think it is. And looking for those rates of return, these really high peaks, people were investing into those markets. But as they invested, they supersaturated. We obviously got to now yields to record lows, so there isn't much premium to be drawing out from this anymore. But when this big fundamental theme shifts, it's hard to tell. All right? This is a theme that is not very clear. And on the opposite end of this pair, the Fed's taper speculation, while an active driver, is not necessarily giving us a clear and decisive read on the U.S. dollar. That is why the U.S. dollar itself has maintained this congestion pattern. So from a fundamental perspective, the analysis is pretty straightforward, but it's not an active driver, unless we get something that materially changes from this particular setup. Now, technicals, the general trend is bullish, all right, and we know that the congestion patterns are more of the tone that we are seeing with this particular pair. So it is better for a range-based strategy, but doesn't necessarily fundamentally support the range-based strategy. Not as much, but it can with the proper conditioning. Market conditions, volatility in the backdrop is much lower. There isn't a lot of momentum for this particular pair, all right, and correlations are relatively low except for other euro-based crosses. So this is not necessarily hitting all the checklist items for analysis on this trader's checklist. There might be some shorter-term opportunities, but it definitely still needs some cues. All right, so let's apply this to the pound dollar, a currency pair that I have been much more interested in recently. So looking at the fundamental bearing, what is most important for the pound US dollar currency rate? The relative monetary policy, all right? And a 6-month rally here for this pair has been supported full-heartedly by the interest rate forecast for the Bank of England, which has certainly overrun its expectations. We have the U.S. dollar, which is actually was back here, still grappling with when it would actually back off of its own excessive stimulus program. So there's a very divergent expectation, a very divergent view, and that helps support this move to the upside. However, now interest rates have been heavily priced in, or a rate hike has heavily been priced in for the Bank of England, and perhaps it's been priced in too aggressively, such that now the pound is somewhat overbought, and the U.S. dollar, which is now embarking on taper, is relatively oversold here. So the fundamental theme is contradictory of this bigger trend. All right, this would look great from a fundamental turn perspective, and if I had a technical view, all right, we definitely have a bull trend, which is why this is something that I have to have a catalyst for. I have to have a signal, all right, but this is a prevailing bull trend. We also know that market conditions, as I said, are more quiet and stable, and knowing that we have a bull trend, knowing that market conditions are not very conducive to major reversals, I have to be cautious. If I did have a break to the downside and volatility started to pick up, that would give me all 3 of my checklist items. But for right now, I only really have one of those checklist items if the market started to drop. Now, if it broke, I would have 2. And if it broke and we started to see the dollar rising across the board or volatility levels picking up alongside risk aversion, that would be all 3. All right, so this one is actually very attractive, but it is not fully ripened yet. The Aussie dollar. So the prevailing fundamental concern here is relative monetary policy. When we look at where the RBA stands in the scale, it is perhaps the most dovish. People still expect aggressive rate cuts to continue off of the rate cuts regime that the RBA has just essentially ended through this past year. But they still expect dovish influence to carry through. This might be a little bit overblown, but we need to actually see those interest rate forecasts pick up. It's difficult to say when they will. Event risk we will look for, but in the meantime, it's not presenting itself. All right. As for the dollar side of things, the relationship to risk trends has materially diminished. All right. So this versus an S&P 500, there's not a very strong correlation. That provides us with a market condition. All right. Technicals show that the general trend has been down, but we have recently seen congestion. Now, if we don't have the fundamentals or an active fundamental theme to really drive this one way or the other, this is more set to congestion. If we have technicals that offer a range support like we do here in congestion within the bottom of this pattern, potentially a turn pattern, but for right now this is congestion, all right, that's technicals. Market conditions, not necessarily very conducive of breakouts, right, and follow through, which is why this drive above 90 failed. So potentially a range trade might be pretty good here. All right, so this actually meets the 3 categories. Now, of course, you have to implement a trade plan where the stops are, where the targets are. Obviously, the time frame will be relatively short because there's more congestion rather than a trend development. But this actually can meet all 3 of those necessities. In dollar yen, we have fundamentals. The fundamentals we talked about earlier in our description, the relative performance of the Bank of Japan's stimulus efforts versus the Fed's. All right, Fed is tapering, which is positive for the dollar, and the Bank of Japan is expected to upgrade its stimulus program, which is negative for the yen. So that is bullish. All right, the prevailing trend is also bullish. We are now in the second wave higher of this big swing up. All right. We also have a technical pattern, a short-term technical pattern. This is a range of descending highs. So that is somewhat contradictory of the bigger trend, and that would prevent me from being confident in the technical pairing or the technical area. As for market conditions, not very volatile, and that is good for prevailing trends, but it seems like this prevailing trend needs something more to push it higher, to convince it onto continuation. So, while the fundamental bearing is bullish for a trend, the technicals and market conditions are not very conducive to that trend continuation just yet. While there is a recent reversal, recent pullback, the fundamentals don't support it unless we switch over to risk aversion, but that risk aversion relationship is not yet in control, nor is it aggressive to the downside. And of course, we need a technical cue to say that we are making a new move lower. So bullish or bearish, dollar yen does not necessarily give us the three necessary items to give me confidence into a trade. Now, as I said, you don't need all three of them, but at least look for two of them. All right. When you have two of the conditions that support you, the probability of the trade is much better. Of course, when all three of the aspects are there, you're looking at a much higher probability setup. All right. And as with anything, it is impossible to know with full certainty that a trade will play out in our favor, but what we can do is attempt to put the best probabilities in our favor. And that's as best as we can do as traders. All right. So try to use this checklist to your and apply it to your trading. Of course, you might change some things around. You might add to different columns. You might even add in a new type of analysis. That's fine. But have this checklist and apply it regularly with each of your trades. All right. Thank you for joining me today, guys. Hopefully this is helpful for you in your trading going forward. We'll do another strategy video tomorrow.